The oil market correction can start at any moment given its rapid and continuous rise for 9 sessions in a row. The trend in the ruble may also change. However, the ruble is unlikely to drop significantly lower against the US dollar. Oil traders have reacted to bullish industry data that showed a draw in US oil stockpiles to lowest levels. On the one hand, optimism still prevails in the market. Crude prices are supported by a weaker US dollar and hopes for a quick fuel demand recovery. At the same time, the lack of new positive factors forces investors to reduce activity and take profit. The risk sentiment weakens as markets see no new drivers for growth. US stock futures show no clear dynamics and keep trading near the levels of the previous close. Oil has slipped into the red, having lost a little more than 0.5% in the morning trade. Brent bulls are doing their best to keep the price above $61 a barrel. The decline is not deep and it has become quite normal in the Asian session. Recently, oil has been winning back its losses in the afternoon trade. However, a correctional decline is still possible. Everything indicates that it may happen in the near future. Both benchmarks have posted their longest winning streak since January last year. Yesterday, oil finished the session with a cross, which is known to be a reversal pattern, so the correction in the energy market is likely to come soon. Investors might switch their focus to the disagreement between the US and Iran. The Islamic Republic continues to ramp up production despite the sanctions. The prospect of supply recovery in Iran may limit the upside potential of oil prices. A drop in oil prices will weigh on the Russian currency, which may stop its continued rise against the US dollar. On Thursday morning, the ruble gained support from an upside trend in the emerging market currencies. The dollar-ruble pair edged slightly lower, yet the ruble's growth has been very unstable recently. The volatility is high during the day, so the ruble may well reverse later. At the same time, there are currently no serious reasons for the ruble to collapse. The dollar-ruble pair is expected to consolidate just below the mark of 74. The trading range for the coming sessions remains the same, between 73 and 75. In case the possibility of a correction in the energy market increases, the US dollar will attempt to break above the mark of 74. Notably, the level of 74.50 does not act as strong resistance, as the real obstacle is located high in the area of 78 rubles per dollar. A deeper correction in oil prices may push the US dollar to this level. Tomorrow, local markets will focus on the Bank of Russia meeting. Investors hope to get a hint on whether the regulator considers cutting interest rates in the next policy meeting. Comments from the central bank about the end of the dovish policy should support the Russian currency. That's all for now. Thank you for watching and stay tuned.